Clearly, a very strong quarter, and in fact, this is going to be quite a year for Barclays. Year to date, we have record profits, as you noted, close to £7 billion. Our return on tangible equity for the first 9 months of the year is roughly 15%. That's on top of the highest capital print the bank has ever had, also at 15% CET1 ratio. So £7 billion is quite a number. All the businesses are doing quite well. So we feel very good about the third quarter, very good about the year to date. And, you know, for many years we were being asked the question, how does Barclays get to its target return on capital of 10% or better? And I think 2021 will be a pretty strong answer to that question.
Jes, let me ask you about the credit impairment release, because we're now worrying, I think, about another wave here in the UK. We've had this, 5-day trend of new cases over 40,000 on coronavirus, but you've released 0.6 billion sterling of those previously provisioned for credit impairment release, those funds that were previously provisioned for bad loans, bad debts. You've released those back into the earnings. Is that wise, given that we still haven't beaten this thing?
Well, we still have well over £6 billion of impairment reserve on our balance sheet for any issues of the economy going forward. I think we have to recognize that the government's reaction to the pandemic, both in fiscal policy as well as central bank monetary policy, has been extraordinarily robust, something that we've really never seen. The actual credit delinquencies that we're seeing are at very, very low levels. So if unemployment stays roughly where it is, and the government support, I think, has had its impact. The markets are very liquid. Balance sheets are in very good shape, whether it's consumers or small businesses. We just don't see the signs yet of a significant deterioration in credit. But if there is one, we are more than amply reserved on our balance sheet.
Jes, as you get into the business of forecasting, to what extent are you preparing for the first rate hike here in the UK this year? We believe that is going to happen. The market has priced in a rate hike this year and a couple for next year. There's sort of 6 cylinders that drive a bank like Barclays. 3 of the cylinders are lending, so the interest we earn on credit extended to corporations and small businesses and consumers. The other side of that is interest we earn on the deposits that are left with us, the cash that is invested with Barclays. And obviously that has been quite slow, given that interest rates have been very, effectively close to zero. So I think getting some degree of inflation back, given the economic recovery that we've seen, translated into a move in interest rates, particularly as the central banks begin to taper off their quantitative easing. I think we'll have higher interest rates, but that will be actually quite positive for Barclays. Jes, how is this time different as we talk about the potential for a rate hike? I mean, we've seen a fairly strong mortgage market still. People have a lot of debt. Credit cards were paid down to an extent during the pandemic and people had more savings. Does this time look a little bit different as you try and manage the portfolio around rate hikes?
So our mortgage book continues to grow. We added over £2 billion of new mortgages in the third quarter. I think the consumer in the UK is being quite savvy. I think they are staying away from higher interest unsecured credit, and they're using their real estate portfolios to borrow through the mortgage market at obviously much lower rates. But we see, the liquidity is out there. The moves by the central bank to increase the liquidity in the hands of small businesses and consumers have allowed them to manage their balance sheets. They have borrowed against their real estate portfolio, which I think is a prudent thing to do. We see that housing market in the UK as being quite robust. I think given the pandemic, it's been quite remarkable how sanguine the economy has been. And I think we have a pretty optimistic view for the next couple of quarters, actually.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.